What's up, y'all? It's Bernadette Joy with Crush Your Money Goals. And do you like paying more taxes than you really have to? I don't think so. So in this video, I'm going to share with you some of my best tips on how you can save more on your taxes and your tax filing this year and not make it so stressful.
A lot of people don't know that you can file your taxes for free if you meet the income requirement, right? So not everyone can file their taxes for free, but if you meet the income requirement, which is $73,000 adjusted gross income, then you can go to the IRS website and look for free filing, and you can file your taxes for free. You don't have to hire someone to do it for you.
Specifically, as an entrepreneur, taxes almost killed my business because I really didn't understand what I should be doing and how I can save more. And so these next tips are going to help you if you are someone who's an entrepreneur, who's a side hustler, or who has some extra income and you want to make sure that you're paying the right amount of taxes and not too much.
Many new entrepreneurs don't have extra money to spare, but engaging a qualified bookkeeper will save you time, mitigate errors, and ensure compliance with tax laws, potentially saving you thousands of dollars in the long run. I did my own bookkeeping for the first 4 years of my business in an attempt to save money, and even though I am a money coach, it doesn't mean that I am well versed in the tax code, nor does it mean that I enjoy categorizing hundreds of expenses in an accounting software system. The IRS provides guidelines on how businesses can deduct startup costs from their federal taxes. Like many entrepreneurs, I was completely unaware that I could claim business expenses on my tax return for costs incurred before the official launch of my company. For example, startup costs could include things like surveys of potential new markets or products, ads to promote your business before it opens, pay for employees being trained, or travel to meet with potential partners. Unlike traditional employees who have taxes held from each paycheck, self-employed individuals are responsible for paying taxes on a quarterly basis. I'm embarrassed to say this, but I did not know this in my first year of business. I was surprised to learn that failure to pay quarterly can result in penalties and interest. Individuals, including sole proprietors, partners, and S-corporation shareholders, generally must make estimated tax payments if they expect to owe tax of $1,000 or more when their return is filed, according to the IRS. I was not aware that I could fund my own 401k through my business. It was never mentioned in the various entrepreneurial communities I joined, nor by my tax advisor as a strategy for how to save more money. Contributions to retirement plans, such as IRAs or 401ks, not only offer immediate tax benefits, they can also help you to retire early from your business if you don't want to work into old age.
Thank you so much for watching this video. If you want to learn more tips from the debt-free millionaire mentor, me, Bernadette Joy, please subscribe to the channel. And if you want more tips on how you can become debt-free, save more, and invest for financial freedom, check out my free guide at crushyourmoneygoals.com/free guide. See you next time.